You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you have been binging throughout the week. Hope you guys have enjoyed yet another week, another slew of content coming your way, usually multiple times a day out here. Remember, if you like what you hear, not just for Vol Views, but for all the other stuff we do on the network, keep those reviews coming on your platform of choice. There's so many out there now. There's new platforms adding us just about every week, it seems like, out there. Amazon Music adding podcasts a couple of weeks ago. New ones I haven't even heard of coming online all the time. So wherever you're getting this show, keep those reviews coming, wherever it may be, to help new folks continue to discover our content in these crazy and troubled and turbulent times. Keep those questions coming, too. We do love to hear from you guys out there, usually 99.9% of the time. And let's see who we're hearing from on the old program today. First, joining us once again on the old Volatility Views program. It's been a little while. He is the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital, by way of a little state, nay a principality, nay a duchy known as Maine. Mr. Rock Lobster, welcome back to the program, sir.
It is a pleasure to be back at the Option Insider Radio Conglomerate, global radio conglomerate. It's always good to be back in Vol Views and potentially get scummed on my my crystal ball bid. But it's okay. We'll wait. We'll let the listeners decide, who front runs who.
Well, I'll do a little early show check. I'm looking the best within our margin of victory. Yeah, I was earlier. One of those other ones where I was until I wasn't. We like to have it within a point. So I'm not quite there yet, but I'm pretty close. Certainly closer than your compatriot over there, the Meatball, who has been fading volatility ad nauseum throughout the year out there. And also joining us, holding down the MIAX hot seat today, Mr. Pat Hennessy, the head trader over there at IPS Strategic Capital. Pat, welcome back to Volatility Views.
Thank you very much. I'm excited to be on the program. I'm also very appreciative to get the invite back after having what I think was the worst crystal ball prediction in the history of Volatility Views. I think you have it in the show notes here, February 14th. And I know that the VIX was up quite a lot the week after that. So, yeah, thanks for having me. I'm looking forward to it.
Yeah, I'm happy to have you back. I'm also a little nervous because, as you mentioned, your last appearance was back on Valentine's Day, February 14th. And we all know what happened a week later. The world pretty much fell apart. So I'm a little nervous to have you back, Pat, because I don't know what other shoe is waiting for us after your appearance, sir.
We will have to see, but there's certainly enough on the horizon to spark another volatility spike here. So
that is true. But let's start there. You haven't been on in quite some time. Obviously, you haven't been on since the world changed in many meaningful regards since your last appearance. So let's start there. How have these last months been treating you over there? How are you guys all doing personally over there? And how have things been faring over there at IPS since all this madness unfolded, sir?
Well, the good news is we're all, healthy. We have, made it out to what kind of feels like the other side of the pandemic. But yeah, it's a very interesting volatility environment. I mean, I can't remember the last time where we've had such a prolonged period of, implied volatilities that are ranging in between 20 and 30 consistently, regardless of whether the S&P is, realizing a 5 vol or realizing a 35 vol. It's certainly been a great environment for traders. And, I think it's also been a pretty forgiving year for the buy and hold types, as long as you didn't get too spooked out in the heat of the crisis back in the first quarter. You're probably doing pretty well. But I think everyone is very much focused on where do we go from here? What are the implications of the election, and how is that going to change, the complexion of markets going forward? And, I think that obviously the election can be a massive turning point in terms of, where we end up for the end of the year and into next year.
Well, speaking of turning points, vol has been known to turn usually during this show. So let's find out as we head right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the program where we review the week that was and indeed still is on the vol trading and trending and analysis and unusual activity and all sorts of fun fronts. Coming into showtime, we saw a little bit of red on the screen there. Not a ton, but a little bit. Let's see, the Dow actually leading the charge to the dark side today, off about 0.5% coming into showtime. S&P and the NASDAQ are both off similar percentages, around 0.15% out there. So not a ton of red on the screen, but any red these days is notable when we tend to have a lot of green a lot of days out there. Even on days when you think maybe there should be red, still some green. So interesting things afoot. We are seeing some green on the vol screens, at least compared to last week. Coming into showtime, we saw our old friend spikes at about 28 3/4. It's kind of vacillating between 28.5 and 28 3/4, down to about 28.5 again now. It puts it up roughly 2.5 handles from where it was this time last week. So getting a little bit of froth, a little bit of churn, a little bit of juice back out there. That number is looking pretty good for me out there. So we could trend a little bit more in that direction. That would look nice over the course of the next hour. VIX cash coming into showtime was hovering around a 28 1/4 or so. It's still pretty much around there, which puts it up a little over a handle, about 1.5 handles from where it was this time last show. And our old friend VVIX continues to move around again. It had given back some of that juice, some of that froth. Remember, it rallied all the way up to about 120, which is where we used to say was kind of the near-term upside ceiling for VVIX. Then it kind of bounced off that recently. Now it's back up there again, coming into showtime. It's at about a 119.5. That puts it up about 3.5 points from where it was this time last week. So knocking on the door of that 120 level. All right, a lot to unpack, a lot to analyze. We'll start with our guest. Pat, sir, what has been lighting up your tape and the tape over there at IPS Strategic Capital this week?
Yeah, I think that there's been a few themes that we've been keeping an eye on. I would say, most specific to the volatility market is just the crazy amount of VIX puts that have been trading. I think earlier this week, or maybe it was towards the end of last week, you had that massive buyer of the February and March 1x2 puts out in the VIX. They bought, I believe it was 60,000 of the 21-17 strike in both of those expiries, which is just, a huge bet on some form of volatility reversion back to a more normal level in the, somewhere in the high teens in the months following the election. I think that it makes sense. I think that, especially this week, given that the S&P has realized maybe a 5 vol this week, volatility is still quite big. You're looking at, November, December, and January at the money vol is all trading north of 24.5, 25. So I think that these mean reversion plays on the VIX make sense for a lot of traders as a way to kind of fade what people expect to be a predictable fall in volatility after the election. And I guess we can get into that a little bit more later. But yeah, there's been a lot of VIX puts trading. One other notable trade was a very large buyer of S&P short dated put spreads. I think it was about 10 days ago on the 13th, they bought 24,000 of the 35-25, 34-25 put spreads. And those were close to being about at the money at the time. And they spent, a sizable amount, I think about $50 million in premium. And they had been getting out of those trades yesterday and today. And that was a pretty nice winner for them. But definitely notable size in, a weekly S&P expiration. 24,000 contracts is quite the trade.
No, that is pretty sizable. You're right. There has been quite a few VIX puts on the tape. We'll get to all that in a second. And VIX options, like we talked about those last week on the show too. I do believe our friend out there, the once and future Dr. VIX, Mr. Rhodes, termed particularly those 1x2 put spreads. I believe his technical term was huge. YUGE. So yeah, there was a lot of downside playing out there in VIX land out there. And it's kind of hard to argue, especially when we get into the futures, kind of hard to argue against that viewpoint, at least in the near term. Mr. Rock Lobster, we turn our attention to you now out there in the quiet, the tranquil shores of Maine, sir. What have you and the crazies in the pit chat, and what have Vol Man, what have you guys all been up to this week?
As far as vol goes, not very much, I think, the SPY, SPX has been moving around a little bit, but I mean, what's the real move in VIX for this week? I'm looking, I think we had a lot of action the prior 2 weeks when we had a pretty good markdown in vol in VIX. But I mean, okay, we started the week at 27.63 and we're ending the week at 28.41. So everybody that trades VIX knows pretty much that you ain't making a whole lot of money trading VIX on the or VIX options on the non-swing. I guess if you're a future spreader or something like that, but there just hasn't been a whole lot in the way of moves for this week. I would say mostly VIX futures are a little lower. It seems like they want to, just if you look at VXX as a proxy for them, kind of rough proxy. Today they're up a little bit, but again, flat for the week. So we spent a little time with vol higher. Everybody's worried about the stimulus, and I mean, as of the close right now, it doesn't look like anybody's worried about anything. With SPX is down, 3 points or 4 points or something like that. So I think vol's on a hold till the election. That's basically it. So it's going to sit here. It moves around. Maybe something moves the needle. It could. Apparently, all of the laptop bombshells and stuff like that seem to come out. Nobody cares because apparently I guess everybody voted already. So I think we just kind of wait. It's like hurry up and wait. So from a vol point of view, I don't think it's hugely interesting unless something drastically changes, like a vaccine that looks like it will get approved, because I think that would change a lot of sentiment. It would take a lot of the uncertainty out for whoever is the next president, because if you now have a vaccine pretty much your job is just getting the vaccine out to people that want to take it and kind of doing that in an orderly fashion. I mean, you would think the next president probably wouldn't screw that up, but, it could happen. And we kind of start to move about as time goes on. So I think it's just a tough time to trade vol unless you like selling short-term vol contracts. But that's really not my game. I have more fun when I think vol's going to move, and then I just kind of gas it one way or the other a little bit. Until the 3rd of November, I don't see a lot happening unless something just happens off the cuff that's a total surprise.
That certainly seems like the way the market is pricing things in right now. Let's get to that a little bit. We've been talking pretty much since the beginning of the year, even before the pandemic really unfolded, before Pat's ill-timed appearance back on Valentine's Day. Even earlier in the year, we had some vol events. Obviously, we, of course, had the assassination of the Iranian general. And, of course, the looming specter of the election was even felt back then. We were talking about how seemingly disassociated that latter portion of the VIX curve had become from reality, even back then in January into early February. We all know what happened almost immediately after Pat got off the show last time. The world took a turn to the left and kept on moving there, and other priorities reared their head, and the election seemed like a distant thing for a while there. And now, of course, we are up against it yet again. Coming up in a couple of weeks, make sure you clear your calendars there, listeners, if you want something fun, non-political, just markets-oriented on the night of the election. We did it kind of fun 4 years ago in 2016, kind of just an impromptu thing with me and a couple of people, and it turned out to be pretty interesting. So I thought we'd do it again in a little bit more of a formal capacity. So if you are intrigued, set your calendars there for the evening of November 3rd. I think we'll kick it off live around 6 p.m. Central and go till pretty much whenever, maybe 9, 10 o'clock, see what's going on. If the markets are moving, we'll stay on for a bit, and we'll rotate on a bunch of people, a cavalcade of stars, if you will, to help me analyze what's going on. Don't worry, no political stuff. No, this candidate is great, this candidate is bad. We're just going to focus on the markets and what the returns are telling us and how they're moving things around, or perhaps not. We shall see. The futures right now are certainly pricing in a whole heck of a lot of nothing in and around the election. Remember, that's kind of been our narrative for quite a while now, is how much juice they're pricing, not just through the election itself, but beyond. They're pricing it into Jan and Dees and all these other contracts. And now for the last couple of weeks, we've seen them really start coming for that. It does seem like the market has coalesced around the notion that there will be an outcome on election night. And it does seem like they're probably leaning towards Biden. That's where most of the polls are leaning. You know my thoughts on polls. They can't predict it the day of the election. How the hell can we possibly know this far out? But that's a conversation for another day. Come into the showtime. It does seem like VIX futures traders in particular are saying, you know what? We're probably going to know something out there, because they've pretty much come for most of the rest of the juice out here. Obviously, off the board now. No future is our front month up there. That's coming into showtime was about 3/4 of a point or so premium to the cash. That puts it a point already below where it was last week, where they crushed it a couple of points last week as well. So they've been crushing it a point or two pretty much every week, and they managed to squeeze yet another point of juice out of it this week. Dees is right about almost equivalent to the cash. It's about 1/3 of a point above the cash. That puts it off about 2/3 of a point yet again. And they came for it a couple of points last week too, and they came for it almost a full point yet again. At Jan, they're kind of completely discounting now the notion of any sort of contested event through Inauguration Day, because the Jan future is back below the cash, or maybe some could have argued it should have been there all the time. But people were obviously buying into this rolling civil unrest all the way through Inauguration Day, because it's actually about 1/3 of a point below where the cash is right now. That puts it also about a full point lower than where it was this time last week. So they have pretty much come for this stuff all the way across the board. Pat, I know you pay attention to the VIX futures term structure. Are you surprised that they've squeezed so much juice out of this thing? You think maybe they're getting a little bit ahead of themselves? We saw similar crushings of vol going into the Brexit vote, going into the 2016, at least until that Monday when we had all the announcements, of course, about Hillary Clinton and the email investigation and everything. Does it seem like maybe they're coming for this a little early, or you think they're on board with what they're doing out here?
It's a good point. The VIX futures have come in quite a bit. I do think that, initially in September, when the market started to sell off, you had vol and spot. The correlation between those two was just completely broken. You had vol going up with the market in August, going down with the market in September. But one thing that we've kind of noticed is that vol does tend to somewhat overreact on those initial spikes. And a lot of that is being caused by, short vol funds and strategies kind of getting out ahead of it, covering their positions. So, back when I think November traded as high as 35, I think that trading in the 29 to 30 level is a lot more fair of a volatility for the November contract. What's also pretty interesting, and as you noted, is, how we've seen the January and the February stuff just completely lose their bid. I think people are feeling a little bit more comfortable with the prospect that, maybe it's not going to be some long drawn out contested process. And therefore we need to, de-emphasize the risk out into early 2021 and place more emphasis on, specifically the, November and December futures. I think week over week, November is about flat right now, but December is up about a quarter of a point. But you're seeing a lot of selling in the, January, February, March futures. Another interesting thing that we kind of keep an eye on is the what they call the forward volatility in the S&P. So kind of looking at what is the difference in volatility between the November 2nd and the November 4th expiration. So keeping an eye on, what is the market implying in terms of the move in between the 2nd and the 4th, which is going to capture the 3rd, which is when the election's taking place. I think a few months ago that traded as high as 3%, meaning that the market expected, about a 3% move on the day of the election. That has slowly trickled lower. Right now it's clocking in at about 2.3%. So that's kind of what the market is pricing in terms of the one-day event risk for the actual election date itself, which is quite a bit lower than what it was a month or two ago. So that's definitely of note for us as well.
Yeah, these are interesting times. Like I said, I understand why they're coming for it now, and it makes sense. And you can maybe argue some of these levels were pretty overdone, certainly early on when they put this massive bid all the way out through to Jan. But I do get a distinct whiff now of maybe we're getting a little bit Brexity here. I believe that was a telephone poll they did right before the Brexit election that caused everybody to just come for the vol. They assumed it was a done deal. This was not happening. And then, of course, we all know what happened. So you always got to leave a little bit of wiggle room for that Brexit surprise out there. Mr. Rock Lobster, what are your thoughts on how aggressively they've come for all this? And do you think maybe they're getting a little Brexity here?
You mean they're selling it early?
A wee bit early, perhaps a wee bit aggressively.
Well, I think at this point, you know what you get with the candidates. I don't think Biden's a surprise. You saw a little bit of his agenda kind of snuck out last night. You know what you get with Trump, which, of course, the most unlikely single-digit VIX president in history. So I don't think those things are really too much of a surprise at this point. I think you understand their agendas, or at least part of their agendas. So from a vol point of view, I think, to be honest, they're still pricing. I think they're still pricing still pricing like the COVID uncertainty, because the cases keep going up and it dominates the media, and people don't know if they're going to have lockdowns. And I agree with Pat that the straddle has kind of withered a little bit from that point of view. The SPX straddle that's kind of around the election. There's still a pretty good sized bid for vol right around the election. So so a 2% move. What is that? 60 points now, 70 points. It's not even that big of a deal at this point. So, I would say it would be Brexity if they took the vol from 28 to 18. But right now, it's a little expensive for what happened, because I think a lot of the stimulus talk sort of took the vol out of the vol. But as we approach the election, how much trading do you want to do into the election? Like, how active are you going to be when there's still that kind of wild card? And I think, and I have a lot of students and clients who are, they are a little hesitant, I have to say. And I think that definitely is part of it. as far as what happens to capital gains taxes, I think there are a substantial amount of questions with Biden that nobody really has an answer for yet. So there is that premium there. But at least short term for these 2 weeks, how much trade is there going to be? Again, like I said, without surprises. So, but when you do look at the curve shape, and I'm kind of when I look at the VIX curve shape, it's a little bit like a Ouija board, and I don't know, like casting the rune sticks or something like that. But normally when I see a pretty flat curve with and we got one there's 2 points between the tail end and the front end, right? I've seen it flatter, but that's still pretty flat. But with the short end of the futures higher, that's generally pretty, to me, it usually is a little bearish, SPX. And still the market is very untenable, I think, anyway. Like if I'm in the pit trading, I would say that would be a pretty untenable vol, as far as there's a lot of uncertainty about where VIX will be during, I would say, the first two, between Nova and Dees, which I think is reflective of what everybody else thinks, So you're basically, there's a bid for vol because you don't know what's going on. You don't know exactly how it's all going to play out. And that tends to become a flattish curve. But I would say, again, the movement is now somewhere between now and the no cycle, which is how I think it prices out. And since we know that the election's the 3rd, like the actions between the 3rd and the 20th, I got to remember what the VIX cycle is. The no cycle is, I can't believe I can't remember the exact date, the 18th. So you've got, that's right, because the 20th is the Friday. So you have that market is it's a little bit on a knife edge as far as action goes. So, and I don't think that, like I said before, I don't think it's going to weigh. The market's pricing exactly what I think is going to happen, which is a tremendous, decent amount of uncertainty between now and November 3rd. And then after that, we'll have some sort of resolution and all the curves will start flipping around like crazy pretty fast.
Let's talk about that flipping around like crazy for a second. Just an interesting thought question for both of you. I distinctly recall 4 years ago when we first had really started doing some live streams too. So it was a fun little experiment. And I recall the moment when Dr. VIX turned to me and said, I think Trump just won Ohio. And it was a very crystallizing moment for me. And I know for a lot of people out there, certainly for the markets, because that's when we saw the futures really start moving and volatility start moving. That was the moment when everyone kind of said, oh, wait a minute, this is actually a thing. He actually has a chance of winning. Of course, we saw all the polls leading up to that. They started to wobble a little bit with the late breaking news about Hillary, of course, but all the polls leading up to that had clearly put Hillary in the driver's seat. Similar situation to what we're seeing right now with Biden. And the market is clearly pricing in an outcome, like I said. And they're pricing in, looks like a Biden victory at that point. So let me put it to both of you guys. Let's say we're doing our live stream on November 3rd here. And in the middle of it, one of you turns to me and says, I think Trump just won Ohio. In that moment where Trump starts pulling away, let's say, do we have a repeat of 2016? Do we have this kind of shock to the system? I mean, obviously, we've had 4 years to digest the Trump administration now, so we kind of know what it is versus back then it was kind of a surprise. But it is, if you look at the polls, it seems like a pretty big surprise. So do you think we'll get a big bang for our buck this time? Or do you think markets will kind of be like, okay, here we go, 4 more years of Trump? Pat, what are your thoughts on that?
If there's any takeaway that I can have from the last 4 years, it's that the markets do seem to like Trump, despite what some participants may think. I find it hard given the backdrop of, very relaxed corporate tax policies to foresee the market going down with the Trump victory. But, if you take the polls for what they're worth, they're clearly pricing in a Biden victory. So, obviously there's some room for a surprise there if the market needs to reprice whatever they expect with a Trump victory that's not currently being priced in. And I do think that there's also going to be a very big emphasis on how the Senate and the House play out as well.
That's true. That's not even getting a lot of play. All the focus is on the top of the ticket, but the other houses very much in play, particularly the Senate, very much in play this time. Mr. Rockloff, same question for you. Let's say we get that moment. Maybe it's you who turns to me on our live election night special and says, I think Trump just won Ohio and or Florida, or throw in any other swing states that you want in there. What do you think happens in that immediate moment, sir?
I actually thought Pat had an interesting point. I don't think it's as much about the president at this point than it is about who controls Congress. I think because that could be, if let's say the Republicans lose control of the, and then there's all Democrat, that generally is like there's a little bit of uncertainty with that as far as maybe some regulatory policies and all this other stuff. So I think that would be if it swings and Trump wins like Ohio and sort of some of the big states. From a vol point of view, people know what to expect already. There's not, as surprising as he is on a day-to-day basis, the overall policy is not hugely surprising at this point when it comes to the economy and stuff like that. So I think part of this could be, control of the Senate, and then how that, and then how that manifests itself if Biden wins. So I think there could be a lot of there could be some surprises there, and I think that might move all a little bit, to be honest.
That could move all a little bit. You're right. There are all these other unknown unknowns lurking around out there, which again makes it kind of interesting that they're coming for this vol as hard as they are right now. Let's see how much they're coming for it in terms of the options out here. Spikes options. Pretty similar to what we saw last week. Obviously, we're still waiting for the futures to come online out there. It's not going to see huge swings in OI until those are back. If you listen to our interview show on Tuesday, we had Tom Gallagher, CEO of MIAX, on there, and he said, specifically for listeners to this program, he said they think they're in the fourth quarter in terms of getting those spikes futures reapproved by the SEC and CFTC. He thinks you'll have them in your hot little trading hands before the end of the year. So that certainly is good news for folks out there who want some volatility trading alternatives and who have been looking. People have been trying. I see the retail folks in particular trying to get in there on spikes, doing some 10 lots here and there. It's challenging with no underlying. I get it. Hopefully those futures will be back soon out there. Head on out to VIX options, and not a heck of a lot really lighting up the tape in VIX options today. It was kind of light coming into the show and still kind of light about halfway through. We're seeing about 154,000 contracts on the tape as of a few minutes ago. Now, there are a few bright signs out there for folks out there who are maybe a little bit concerned about anemic VIX volume out there. The ADV has ticked up pretty substantially since our last show. It's back over 400K. It's up to about 410,000. It puts it up nearly 60,000 contracts from last week. So we had a few days out there of some actual paper this week. Let's break down the top 10 hot, sizable. I put sizable in air quotes because they're kind of smaller than usual. But the top 10 largest open positions out there in VIX land right now. Number 10, 119,000 of the D's 22 puts. That's all it costs you to break into the top 10 in VIX these days, listeners. 119,000 contracts. That's not a heck of a lot. Number 9, 124,000 of the November 23 puts. Number 8, 124,000 as well of the Jan 75 calls, one of my favorite positions out there. Number 7, 126,000 of the D's 23 puts. Number 6, $1.27 of the D's 18 puts. Number 5, 129,000 of the February 17 puts. Number 4, our second and final call in the top 10. So kind of getting back to what Pat was saying earlier about how it's kind of all puts all the time right now. That's certainly the case. Only 2 calls in our top 10 listeners. 150,000 almost even of the November 65 calls. Then we go back to all puts all the time. 157,000 for number 3 of the D's 20 puts. Numero dos here, $1.63 of the March, our first March in the top 10, March 17 puts. And number 1 with a decent, if somewhat small bullet out there, 186,000 of the November 21 puts. Total of right around 6.2 million contracts open. That's talking about roughly 3.1 million on the calls and about close to 3.1 million on the puts. So again, not a huge bias in terms of OI, but again, if you know that VIX is usually pretty call heavy, that's a lot of puts have flocked in over the past couple of weeks to drive that number out. Let's look really quickly on what's been lighting it up out here this week. Like I said, today kind of light, only 154,000 contracts on the tape. The most active contracts, about 15,000 of the NOV 26 puts and about 15,000 as well of the NOV 20 puts. Also going out to Jan a little bit. Looks like maybe a three-way strip of the 10,000 each of the Jan 21, 22, and 24 puts also trading out there today. Yesterday, a little bit more active, 363,000 contracts on the tape. The most active contract yesterday, 44,000 of the NOV 25 puts, followed by 25,000 of the NOV 21 puts, 23K of the Ds 25 puts, 22,000 of the NOV 27 puts, and a nice 16K of the NOV 20 puts. Similar story on Wednesday, but for a little bit more paper. 470,000 contracts going up on Wednesday. Most active contract, the NOV 23 puts for 51,000 contracts out there, followed by 50,000 of the FEB. FEB back on the board there. FEB 15 puts, 47,000 of the NOV 21 puts, 37,000 of the NOV 45 calls. One of our first calls in a while here in our top five, and 20K of the NOV 50 calls. Tuesday was the most active day of the week, 634,000 contracts on the tape. The most active contracts, yet again, about 54,000 of the October 28 puts. Those bad boys went out on the 21st, so those are already gone. 42,000 of the Ds 20 puts, 41,000 back to October of the 30 calls, so another one that's off the board. And then we've got 40K of the NOV 21 puts and about 38,000 of the NOV 23 puts. And then Monday, another decent but somewhat light day, about 325,000 contracts on the tape. The most active contracts, about 30,000 of the October 26 puts, 23,000 of the NOV 65 calls, 19K of the NOV 24 puts, 18K of the October 27 puts, and round out the top five there, about 12,000 of the October 28 puts. Pat, you talked earlier in the show about how you've seen a lot of puts going up last week. Any of these trades or any interesting nuggets coming across your radar in VIX options land this week, sir?
You know, there hasn't been a trade in terms of size and really expiry that was as notable as the one from last week in the February and March expiration. But I think what you're seeing is a lot of November and December downside being purchased. It seems like, based on what I can see, there's a lot of people looking to spread or even in some cases do put ratios on the downside to try to reduce their premium outlay. I think that the thought process there would go that, the VIX is, likely to come in a little bit once you take out the event risk from the election and you gain some type of clarity on, how the political environment looks in the U.S. after the election. But we're not going to go right back down to a 12 or 13 VIX immediately. There's still a lot of uncertainty out there. We're still dealing with spiking corona cases. So, we actually think, I think that put ratios do line up pretty well. And it seems like the market, agrees with that. And that seems to be where a lot of people are focusing their efforts in terms of playing a crush and vol.
Yeah, we certainly saw those sizable ratio put spread prints last week. And you're right, it's hard to fault them, especially given what we've been seeing out there with the market coming for all this vol. A nice ratio put spread or two could certainly work out there. Mr. Rock Lobster, same question for you, sir. Any interesting VIX options prints come across your radar, or the radar, I should say, of the crazies in your pitch chat this week, sir?
That's it. Like, as far as I thought, the most interesting is just the overall bid for VIX, right? The NOV 29 straddle is almost $8. So, normally you look at a straddle and you go, hey, that's where the market thinks things are going to go. So, that's pretty pricey, to be honest. Now, again, we're in the danger zone. We've been in there for quite a while. I think we dipped out of it maybe once or twice briefly. And that overall, I think just the vol is jacked in November. It's the easiest way I can think about it. Because I think there will be a pretty substantial move in vol in VIX. I mean, at some point after that, high, low, I really don't know, to be honest. But just looking at how expensive the upside is, looking at, making call spreads and things like that. So as far as I've seen a lot of put interest, and that's keeping the vol up for sure. So, just people keep placing bets. I mean, as far as I'm concerned, I'm not really going to do anything till very close to the election anyway, just because I don't think much is going to happen till then. So you might as well just wait around. If you're going to trade vol, I only want to trade it when I think it has a chance to really move and inflect. So at this point, I'm just kind of sitting around. I think VXX is very interesting because by the election, it'll probably be about 50-50 as far as its composition, because there'll be a lot of December in it, right? And when you look at the curve right now, it's kind of flattish. So there's some juice in November and there's some juice in December. So like VXX could actually move pretty darn hard. And I don't think the November cycle, the No 13 cycle or 20 cycle, is absorbently priced. I think there's an interesting trade there as well. So I think the vol will move. I just don't think it's going to move until November 3rd. But as far as volume goes, yes, there has been a lot of put buying, and it really isn't going away. And it probably won't go away until November 4th.
Well, let's talk about your favorite product and the product everyone out there loves to fade. That's, of course, VXX coming into Showtime. It had gained about a half a handle from last week. It's given up some of that. It's up about a third of a point now. So effectively unched in the realm of VXX. Of course, any week that it doesn't go down is a sad week, I know, for a lot of you out there listeners. Coming into Showtime, or actually coming as a few minutes ago, had about almost 100,000 contracts on the tape. That's roughly half of its ADV. Its ADV is almost 200K. You know, that's actually down from what we've seen. It's down about 18,000 from what it was this time last show. So ADV and VXX coming in a little bit, which is kind of interesting given what we've seen out there in the broad volatility space over the past couple of weeks. The most active contracts out there today in VXX, about 7,300 of the OCT22 puts and about 7,000 of the OCT23 calls. Let's look at the top positions out here, the sizable positions in VXX land as well. I won't make you guys guess where the first call comes because we're kind of coming up against it here. But actually, it would be number 10. If you were guessing number 10, that would get you to the November 40 calls with about 21,000 open, followed by 21,000 as well of the Jan 18 puts. Number 8, 21,000 as well of the November 35 calls. That's our second call out there. Number 7, 22,800 of the Nov 21 puts. Number 6, 23K of the Nov 16 puts. Number 5, 24,000 of the Jan 30 calls. Numero quattro here, we got 26K of the October 20 puts. Number 3, 26,500 of the Nov 17 puts. Number 2, about 31,000 of the Nov 30 calls. And number 1 with a bullet, 46,000 of the Jan 15 puts. A while ago, those seemed pretty aggressive, pretty outlandish. Now the 15 strike isn't that far away out there. Before we get to some of your mail out there, we got to touch on this big product we talked a lot about on the show last week. And I know you guys had a lot of thoughts on our Twitter polls and on our conversations. Everyone was all a Twitter, pun intended, about what's going on in UVXY. You know, if you listened to the show a couple of weeks ago, we talked about, hey, someone's really loading up on the 10 strike out there in UVXY. Well, lo and behold, we had them on the show last week, the folks from Hercules Investments. They're the ones who are loading up on the 10 strike out there. Coming into Showtime, by the way, let's see where our old friend, it was at about a 17 and change, about 17.15. It has given up some of that now. It was up about 2/3 of a point from last week. It's down to about 1690 or so now, so it's up a little bit less than half a point. So it has given up some of that juice it got from last week. It had about 65,000 contracts on the tape as of a little while ago with the big prints out there. Almost 10,000 of the OC17 calls and about 5,000 of the OC18 calls. So the ADV has trended up of late, even though the last couple of weeks it has ticked down. It's down about 11,000 contracts to about 127,000 out there. But if you listened to our show last week, you know the UVXY whale, the folks who are dominating all that 10 strike out there, the folks at Hercules Investments, they were a little bit disenchanted with UVXY, I think, to put it mildly. In fact, I do believe their CIO, James, on our show last week said they're pretty much given up on this and they were going to wash their hands of it and liquidate their positions, which are pretty sizable as of Monday. Well, looking at the numbers out there in UVXY right now, there's still a lot open on these 10 strikes. So it seems like maybe James had a bit of a change of a heart. Let's look at the top 10 out here in UVXY really quickly. Number 10 is about 9,000 of the March 10 calls. Then let's jump up to about number 5. There's still about 18,000 of the Nove 10 calls. And his primary position out there, about 40,000 of the D10 calls out there. So clearly, maybe something changed in his analysis after he came on the show, because he was talking about liquidating a lot of that out there. And this time, looks like not so much. Let's look really quickly at some earnings vol. Obviously, we had a lot of big names popping off this week, a ton of them. If you guys want to see all the reports, all the move results, and season reports for all these names and a whole bunch more, you know where to go, theoptioninsider.com. Click on that options news and articles tab there, and you get all these reports for free. Can't beat the price, courtesy of our friends over there in Oratz Land. Some big names popping off this week. Had IBM on Monday. We had Netflix and Snap on Tuesday. The old Tesla and Chipotle on Wednesday. Intel, American Airlines, Southwest, Coke on Thursday. Today before the bell, we had Amex. Let's see who we've got in the results reports here today. We got AT&T from yesterday. They were pricing in about looks like about 5.5%. They delivered 3.7%. So, yet again, staying in line with our pretty much vol annihilation theme for the last couple of cycles. Southwest Airlines, same deal. They were pricing in 6.3%, and they delivered 3.5%. You get in the theme. Tesla was one of the worst. Tesla was pricing in about 7.5%, which is fairly rich on still a $400 name. They delivered less than 2%, about 1.7%. Obviously, they could have swung if you've held it a little bit longer now. So let's pull up a recent quote for Tesla. This was just out of that report. Yeah, they've given up a little bit now. They're down to about 415 and change. So if you held on to that straddle, you did a little bit better. Didn't quite get your 7%, I don't think, but you did a little bit better now than you did immediately after the report when they were still trading about 430. They're moved in the other direction a bit down now, about 415. American Airlines, they are pricing in 5.5%. They delivered less than 1%. Listen, you're getting the theme here yet again. Third season in a row now, third cycle in a row this year where they've just come for the vol just aggressively. If you want to see all those numbers broken down for yourselves, check out the earnings season report as well over there at theoptionsinsider.com. Now it's time to see what you guys have in store for us. A little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins. We've actually been so busy of late, we forgot to pay off this poll we asked you guys earlier in the month. We did a little fun flash poll during the show a couple of weeks ago, asking you guys just quite simply right now, what is your preferred way to play vol out there? We gave you 4 choices. So using some of the vol products we always talk about, like the VIXs and the spikes and everything else. Or you go the direct route, trading, SPX vol, SPY vol, that sort of thing. Or going through some of your preferred vol ETPs, like your VXXs, or maybe you want to go the more funky ETP route, aka the levered and the inverses like the SVXY and UVXY and all that good stuff. And you guys overwhelmingly chose the direct vol route, 61%, saying you get your vol fixed right now through the S. And let's say trading SPY. That was kind of surprising. Only about 22% coming in for VIX and spikes and the vol products, and then about 17% for VXX and the other vol ETPs. No one voted for UVXY. That's surprising. And SVXY. I think if we had done this poll more recently, the numbers probably would be different, particularly after the big conversations we had about UVXY of late. Like this comment from Max. Max chiming in saying, great job booking the UVXY whale on the show. I learned a lot from it. This is why I tune into you guys. You are the best in the game. Keep it up. Well, thank you, Max. Yeah, that was a fun show and kind of interesting and very timely because we had just discussed those positions a week before on the show. And then lo and behold, we had the fun that put them on a week later. So that always makes it kind of fun when we could talk to the folks actually putting on the positions and kind of get some of their thought process on that. Let's see. Looks like you guys, another one from, well, actually, before we get to that one, Andrew, you weren't on the show last week, and Pat, I don't know if you heard it, so we'll save that one for next week. Let's go. There's more questions about all of our UVXY fun. This one comes from Montevecchio. Montevecchio wants to know, we've got tons of S&P vol products, and now NASDAQ is joining the mix. Where do you think the next big opportunity is in volatility products? What's the next big hit? So, Pat, you're always out there watching the vol space out there these days. We're seeing, of course, obviously VIX has been around for a while. Spike's playing in that S&P arena. NASDAQ is getting into the game with vol Q. We've got some other things out there. If you could have your heart's desire, if you could have the vol product you think is missing out there for the masses right now, Pat, what do you think it would be?
I know that the NASDAQ volatility product just came online, and it hasn't garnered much interest. And, to be quite frank, I think it's a very challenging environment to roll out a brand new product, whether it's a volatility futures product. But, I do see opportunity. We work with a handful of financial advisors, and I do see opportunity in using the products that are currently available to the market, like VIX options, like VIX futures, Spikes options, Spikes futures, to be able to create innovative new tail risk hedging products. One of the main things that we talk about is the level of interest rates and, kind of where bonds trade, the potential for inflation if, there is in fact a blue wave on the horizon. And, people are not very comfortable with relying on bonds as a hedge for their portfolio. So I think that there's a lot of opportunity in the financial advisor and even in the retail space for innovative products that are specifically intended to, hedge against equity market volatility and hopefully not have the decay profile of something like VXX. So less of a timing and trading vehicle and more of something that can be a sustained portfolio allocation for longer term investors. And, we're actually in the early phases of looking into creating, I'm not sure, have you guys ever heard of the TAIL ETF? It's Cambria Investments, MedFavor has an ETF that purchases basically long dated put options, out of the money put options on the S&P. And they invest most of the capital into just treasury bonds. But it's an ETF that's gone from, zero to $400 million in less than 3 years, which is staggering growth and shows the appetite for this type of product out in the market. And what we're actually looking at is creating a very similar product, but instead of using S&P 500 put options, it's going to be using VIX call options. And then we had a piece of academic research that we released back in 2015 that kind of outlines the strategy. But it's something that we're really excited about. I think that everyone on the show understands the value of using VIX compared to S&P 500 puts. It's obviously a different trade-off, but there are some very notable benefits to using VIX options instead of S&P 500 put options. And we think that there's a huge market out there for these products to grow substantially. And so that's one thing that we're pretty focused on at the firm.
Interesting. Obviously, you get that nice, big, juicy pop in VIX land that you don't really get in the S&P puts. What's the time frame for that, Pat? How's that looking?
It's still exploratory. We're talking to a few ETF providers, but the one thing that's encouraging is that with the advisors that we speak with, there's clearly demand for these products. So it's just about finding the right partner, and getting the right people to work with to really roll out the best possible product for advisors and long-term high net worth individuals.
Interesting. Mr. Rock Lobster, same question for you, sir. I'm assuming you're not creating a product as well, but maybe you are. And what do you think could fill that gap out there right now in the volatility space, sir?
Oh, wow. Well, anything where you could kind of finance your protection, I think would be a win. That's what my Vol Trade Club is, teaching people how to finance protection using the VIX term structure. So I have to say it's not beginning option trading, but my students do like it. I don't know how that would lend itself to an ETP or something, but
you could call it the pay for your puts ETF. What do you think?
It is. Have the market pay for your puts. But it works as a strategy. As far as what would people like in the vol space, I think anything that's not confusing, to be honest. A lot of it is just the reality is just there's just enormous decay in these products. That's just the way you're just buying a chunk of vol on top of a chunk of vol. So it's not an easy thing to buy. The idea of just taking TLT dividends and just going and buying some VIX call spreads with the balance doesn't sound like a bad idea that an investor could do if they wanted to. And then you just see what you get. You forego the interest, but you get some protection. You get a little bit of bang if you want. So I think they continually try to create things, but what gets you in trouble? Like for the average investor, I think I would stay away from the levered products. Just trading the straight vol is tough enough, even for an ETF or an ETN provider. So what would work? I don't know. I think ultimately, if you use these products, the only thing that works is hard work. You have to you position them and trade them and take advantage of the curve and where vol is at a particular time. I think if you kind of think like that, you have a good shot at using the products to your advantage. I think a lot of people use them. They're always using them for a straight hedge, but they forget there's a lot of forward vol advantage in the vol products, depending on where the curve is at a certain time. So there are better ways to trade the vol products. So, of course, that's what we do. We help educate people, at least our more advanced students, on how that is. So, I don't know. I would think more people would do better just learning to understand the products that are actually out there. Because when I go talk to people live, when I say volatility, the whole room is blank. Like there's a blank stare, that I'm speaking some foreign tongue, an alien tongue, actually. So
it's like you're actually speaking Greek to them, sir, which you literally are, because they are all Greek metrics out. Now let's see if the realm of volatility, if those Greek volatility gods and others can smile upon us this week as we head on into our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, it's that time. It's the portion of the show that Pat's been sweating about the entire time. He needs to make up for his previous prognostication, which was so, shall we say, interesting that he knocked the world off its axis for the last 6 months, Pat. So that was all your fault there. Just your prognostication of vol sent the world a little bit of tizzy. But coming into this segment, it's looking pretty good. For me, the vol gods have smiled upon me. I asked them to get a little bit closer to my number over the course of the show, and they obliged me. Coming into this segment, we're seeing VIX cash at about a 27.89. That puts it a little over 0.3 of a point, about 0.34 exactly away from my 27 double prediction. So that's looking pretty good. Spikes was a little bit higher. That was at about 28.15. I think it's given up some of that box. Yeah, still about 28.15 out there in Spikes land. So I'm looking pretty good on VIX cash, and not bad within a point within our margin of victory now on Spikes as well. So I'm going to take that. That's a twofer. It's not quite a bullseye. Our bullseye is 0.1 out there, but it's pretty darn close. A third of a point. These days, with all the madness going on in the volatility space, I'll take a third of a point out there. The meatballs, once again, fading pretty heavily. He was down at 24.24. That obviously did not come to pass. And James, our friend, the UVXY whale last week, was feeling the upside. He was at a 30, so not quite there as well. So I will take my winner chicken dinner this week. Got to take your victories where you can in the year of our Lord 2020, listeners. That means I get to choose. Do I want to go first, or should I allow others to go first? And you know what? Since his last prognostication was, shall we say, challenging, let's give Pat an open floor, an open season, allow him to come back for some volatility redemption. So, Pat, the floor is yours. I give you the dubious honor of going first, sir.
All right. Well, try and, fix my my previous follies. So I'm going to go, and this may be, a flashback to the last time, but I'm going to go slightly lower. I'm going to say that the VIX is trading right around 26.5 at the end of next week. I know that the elections are on the horizon, but the VIX is also going to be kind of hovering right over that Thanksgiving time period. If you're looking 30 days out from the 30th, you're going to be using options in the VIX calculation that are, basically taking into account that we are going to have holiday trading. And I think, to Andrew's point earlier, I think that the market's kind of frozen right now. No one really wants to stick their neck out there and put on any big trades ahead of the election. I think for the most part, people are positioned and they have an idea of what they think could happen. And I think overall, if the market continues to, realize next to nothing and we keep trading on that, there's more risk on the downside. So I'm going to go 26.5.
26.5. Interesting to kick off our crystal ball here. Mr. Rock Lobster, once again, I shall be the magnanimous victor, and I shall cede you second place, sir. What are you feeling out there for the volatility crystal ball next week?
You can't fool the listeners. The only reason you cede that spot is so you can scum Pat. Or you do this every.
If you won a couple, maybe you could choose when you go. You have to win first, then you get to pick.
Okay. Because the problem is I'm not on the show, and then when I win, my victory somehow just get blown in the air because Meatball's on.
The Meatball does try to steal your thunder sometimes, but let's say there hasn't been a lot of victory in the option pit seat of late.
So I'll tell you, I like Pat's idea, to be honest, but I am an honorable guy. I'm not going to scum that guy for like 2-3 cents. So what I'm going to do is I'll say $26.99. How about that? $26.99.
Interesting. $26.99. Starting to get a little bit of a theme. I'm even going to make sure the notes say it's Andrew, so we can reflect that it was you. $26.99 next week, when or if your prognostication comes to pass. That means I am last. Listeners, one of the perks of winning, you get to choose when you go. And this is a rare thing for me. I don't usually do this. Sounds like we're all kind of a similar mind this week. I kind of like where I am this week for next week. I can't remember the last time I kept myself pretty much the same, but that's pretty much what I'm going to do. I like 27 double. I'm going to stay there yet again and work for me this week. And given everything we said throughout the entirety of the show, I think that's a pretty good landing spot. So a weirdly, strangely tight market for this time next week, listeners. We got Pat on the downside at 26.5, Mr. Rock Lobster right in the middle there, scumming as usual, 26.99, and me on the upside there at 27.55. All right. Unfortunately, listeners, that music means we come to the end of another epic hour-long sojourn through the world of volatility. Hope you guys like what you heard. If you like what you hear, so where else are you getting all this kind of information all crammed into 1 hour, listeners? I challenge you. If you like what you hear, head on out to your platform of choice. Keep those reviews coming. It does help new folks, particularly in these troubled times. We've all seen the waves of, let's say, new retail discovering the markets these days. They need a place to turn, so give them an outlet. Give those reviews on your platform of choice so they can continue to discover the longest running and certainly the premier volatility program out there. And let's go around the horn before we go, see what everyone has cooking up. Pat, you gave us a nice little tease about a product you guys are working on out there. What else do you guys have up your sleeve? You want to leave our audience a little bit of a hint, a little bit of a tease of what you're cooking up over there at IPS Strategic Capital. Now is the time, sir. The floor is yours.
Yeah, so we're still managing a variety of hedged equity. We have a mutual fund that's a kind of all-in-one hedged equity solution. We also run long volatility and hedging overlays for some of our clients. One of the newer products that we've been getting interest in is actually kind of out of character for us, but an income generation strategy. One of the main complaints that we hear about is I don't want to own bonds. It doesn't really make sense at these levels. So what can we do to try and get some income? And we have what we think is kind of an innovative new strategy where we're trying to scrape dividends on, baskets of high yield stocks, or even, broad-based ETFs like XLU, where we're hedging out a majority of the price risk, utilizing options. But given that you can allocate the, full amount of capital that you desire to these ETFs, you can still receive 100% of the dividend, but maybe only take 20 or 30% of the price risk. And, how that kind of works out when, you have something like XLU yielding 3 to 3.5%, it can actually provide some pretty favorable risk reward in terms of investors that, either want income or a payoff stream that looks similar to a bond, but still has very little exposure to the underlying equity markets. So I think that it does kind of go nicely with our other products. But, holistically at the end of the day, with interest rates where they are, we just feel all the more strongly that, long volatility is going to continue to be a better hedge than owning bonds. And you're not giving up a lot at these levels to make the transfer from, leaving your bond allocation and investing in long volatility, and then allowing yourself to take more risk in your portfolio because you know that you're hedged. And I think that has been true this year, and it'll continue to be true going forward. So, if I encourage anyone who has questions about anything that I outlined to go to our website. It's www.investps.com. Happy to help answer any questions. Our specialty, we eat, sleep, breathe options and volatility stuff. And, we have some pretty innovative ways to incorporate these rather advanced products into a, plain IRA or, brokerage account. So, yeah.
There you go. Check it out, listeners. A lot of stuff cooking. Check it out for yourselves. InvestPS.com. And Mr. Rocklops, the same question for you. If folks are intrigued, maybe they want to check out the Little John or the Vol newsletter or all the other stuff you guys have cooking. Where should they go? What should they do?
Go to optionbit.com memberships. If you want to learn how to get your juice, have somebody else pay for it, come to Vol Trade Club. Anyway, that's where we are on everything. So come on down and check it all out.
Come on down and check it out. Indeed, optionpit.com is the place to go. And, of course, you know where to go to learn more about all things spikes. Pretty easy, MIAXoptions.com/spikes. Or just search for MIAX and spikes. It'll get you there. What do you find on that page? Well, a cool little 2-minute video explaining what the heck spikes is in nice, succinct detail. Some great data, historical data out there looking at what spikes has been up to of late. The press releases, so you know the second that the futures are back in action. And, of course, even a link to a cool little show called Volatility Views. What more could you ask for from a volatility destination? MIAXoptions.com/spikes. And on behalf of Pat and the Rock Lobster and our friends out there in MIAX land, and indeed myself, thank all of you out there for downloading, streaming, subscribing, for sending in so many great questions. We'll just barely chance to scratch them this week, so keep them coming. We'll get to more of them on future shows. Don't you worry. And we'll see you back here on Monday for the option block, where it all kicks off again all the way through to Friday, and another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.